Well, good afternoon, everyone. This is Trader Tim from eminimind.com doing another Monday market analysis video. It's the 10th of August, 2020. And here is our daily SPY chart. We can flip over to the SPX and see our gaps that we have unfilled. The last unfilled gap above us is a 33.73.23. And then from there will be uh, basically clear sailing into all-time highs. A 93.52 is the all-time high in the SPX. If we go back to the SPY for a second though, and we look at this 50% retracement that we traded here down around the 300 level, it's at its negative 23% target. Last week I was talking about looking at this area to put on some hedges. You could use, just straight up buying puts for that to protect some of your longer term positions. The idea being you're buying very cheaply out of the money puts, and so they don't cost you much. If the market goes higher, your long term or your longs will massively outperform the cost of the insurance, if you will, of those puts. But if the market does go down, and let's say we drop to like a 320, something like that, then all of a sudden your insurance is paying out real big, so to speak. So we've got the negative 61.8 from this smaller retracement. You can kind of see both lines, the negative 61.8 and the negative 23 from the larger retracement, are right on top of each other. Doesn't mean we can't go higher. We most certainly are very, very close to that. We'll call it a 340 on the SPY and breaking out into all-time highs. But I always like to be looking at the opposite side of whatever's on the forefront. So right now it seems like any intraday dip is getting bought up in the market, and the market is just on a tear higher, can't go lower. And so when I see that sort of, that pattern coming into play, I always want to be thinking about, okay, well, you don't want to get caught off guard and have a, big sell-off, or a, even like the first leg down back in February, caught a lot of people off guard. And if you're thinking, okay, the market's chugging along, we're just ripping higher, higher, higher. Maybe you started putting on some insurance at the beginning of the year, and you go a month or two, don't really need it, market's going higher, and then boom, all of a sudden, it comes in handy. So trying to think a little bit like a chess match and a couple moves ahead. As far as intraday goes, wasn't a ton going on today right off the open. You can see until we had the sell-off here, the first 30 minutes or so kind of encompassed most of our morning. If we grab, well, I'll pull up the 30-minute chart so we can see that. The first 30-minute high and low kind of encompassed the first hour or so of the day, and wasn't a lot of movement. It was a fairly tight range, kind of sitting up at highs. Didn't really have a halfway back trade in either direction, either the short or the long. I guess technically they did trade, but they didn't really get any follow through or momentum. So wasn't a whole lot going on this morning. The last couple of Mondays there hasn't been a whole lot of excitement right at the open, and that's okay. There's also not a ton on the economic calendar for the week. Some earnings still coming out, but we'll just wait and see what happens here. If we can go higher from here, then a almost panic buying could ensue. But the real key that I'm looking for is a break of a prior day's low, and then the following day to continue in that direction. So we had a very slight break here last week on the 6th, where we broke the prior day's low, but not only could we not close lower than the prior day, but we closed, at highs for the day. So I want to see us break the prior day's low, close lower, and then the next day continue that trend down as a change in direction, sort of momentum change. Otherwise, this uptrend is just going to be intact, and there's really not a whole lot to do up here. As far as swing trades go, the only thing I've got is the DELL long. Last week we did have also on the 6th a day where we went below the prior day's low, but it was only in the first 15 minutes, and so when that happens, I just put my stop below that first 15-minute bar, and then we ended up closing above that, staying in the trade. Next day was an inside day, and then today we're kind of getting a little bit more lift. Not as much as I would have liked to see. A little bit lagging. We had this kind of double bottom here off of the gap up, and so that's where the entry was, above the high of the July 30th candle. So I'll keep trailing my stop half below the low for today, and then half below the swing low back here, just to give a little bit of wiggle room. You could break it up into thirds if you want, to do 3 chunks. Lots of different ways to break up your stop, but just keep things simple. 50% below the low of the day, and then 50% below the swing low, and that puts you at a profitable trade, even if you get stopped out. So I haven't really felt like there's been a lot of great long entries up here for swings, so that's why I only have the one. And then I've got some insurance on the put side for a move down, so I don't really have any shorts that have set up either. So again, kind of in a little bit of a limbo as far as trade execution goes, but that's typically what you see in the month of August. A lot of kind of wait and see mode by traders as we get into the fall and the volume starts to come back in. If you look at the SPY here, February, March, April, not really a lot of jump in February, but end of February, March, April, into May, nice big volume, a little bit of a spike in June, but for the most part, summer trading volume is pretty low, and then if we can see a uptick a little bit, especially as we have the U.S. election coming up in November, September, October, November, and December should be pretty interesting, especially here in 2020 with that presidential election. So not a whole lot going on this week, but we will be doing a live trading session tomorrow morning. If you want to tune into that, you can do so over at eminimind.com/VIP. And if you have any questions, feel free to put them in the comments below. Thanks, and have a great week.